What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on Pepsi, symbol PEP. And what we're going to do in today's session is I'm going to review a chart setup that I did on YouTube on April 24th. And that setup looked like this. So Pepsi had been in a downtrend for the better part of 2 years when I did this video here. And it was a very sour day in the market. Pepsi had just reported a negative operating performance quarter, and the stock had dropped down substantially that particular day. And what I did in this video is I said, all right, well, this is a high quality name. Maybe there's an opportunity here to buy this high quality company at a distressed price. The price looked pretty distressed by the chart. So I said, all right, let's go look for a support level. And I drew the support level at 134.71 all the way down to 126.46. And what I said during the video was, if you can get an opportunity to buy in that green shaded area, it may be an opportunity for either a quick bounce for a trade or potentially an entry point if you're looking for a high quality company at a discounted price. And what I said was, this green shaded area wasn't a guarantee the price was going to bounce there. Okay, what it was it was simply looking at a clue as to where it looked like the big money might be stacked up with buy orders waiting for price to get down to that level. So they might have been waiting for years for this opportunity to start buying somewhere between 134 and 126. That's what this clue was in this video. So let's go see how that played out after that video was posted. Okay, this is what it looked like when it was posted. I'll really let you be able to see it here. So we dropped into that level there, and then these are weekly candles. So each one of these candles is a weekly, this is the price range for one particular week. So 1 week, 2 week, 3 weeks, for several weeks, 4, 5, 6, 7, 8 weeks. So for about 2 months, price chopped slightly level. It just kind of was gradually being accumulated in between 134.71 and 126.46. And price never did drop below 126.46. So if you had a protective stop below there, you would not have been stopped out. It would have been a little nervous there for a couple of weeks. But if you're just disciplined, you're like patient, you let your stop do its thing and let price action do its thing, then a few weeks later, you got your gap back out of the zone. Okay. So it took about 3 months for this trade to work, and then we continued heading higher. And just this week, you would have been sitting on about a $15 profit. Okay, so about a 12% return in a little more than 3 months. So call it 3 to 4 months, a 12% return. And I say that's 12%, but you're not going to get returns. You're not going to get 50 to 100% returns real quickly in a company like Pepsi. I mean, Pepsi's growing 3% a year. So if you can get a 12% return in 3 or 4 months in a high quality company that's growing 3% a year, that's a low risk way to buy the dip. Okay, so there's a couple ways to buy the dip. You can do it using technical analysis like I just showed, or you can use fundamental analysis like Warren Buffett does. And in May, on our Equity Empire Substack page, I posted an article with a 5-step process that Warren Buffett uses to buy high-quality companies using fundamental analysis. So if you want to use fundamental analysis, just check out this article here on our Equity Empire Substack page. Okay? If you want to use technical analysis, keep watching my videos, because that was a textbook setup right there, and this is the way it played out. Now, if you're wondering, what do you do next? Okay? You're like, I didn't see that video, John. What are you going to do? What are you going to do for me now? Well, what I will do now is like, all right, how would I manage this trade? Okay, if I was in this trade right now, I'd look for a resistance level, because I didn't do one in that original video. There is a resistance level right here. So just yesterday, we entered resistance in the 152.46 price point. So we got into there and we got rejected from that. So if I was in that, if I'd entered that trade in the green shaded area, I would at least take a partial profit. So I'd either take a partial profit here at current prices, or exit the whole trade and look to get back in if we drop back down into maybe the 130, the 140 range, or back to the support level again. Okay, but I would take at least a small profit. If you don't want to take profits there, you could potentially just move your stop up to break even. That way, ideally you'd lock in some profit, move your stop up to break even. That way you'll kind of lock in profits, okay? It's good to take money off of the table when something's moved 12% that's only growing 3% a year, okay? So, and there is resistance just above 160. There's more resistance. So for us to work our way meaningfully higher, there's a lot of resistance to work our way through, okay? So that's the way I would manage the trade. If we do get a pullback, once again, you might get an opportunity to buy this high quality asset once again at a lower price. All right. So let's wrap up the session. Before we wrap it up, I do want to give a shout out, recognize my followers on my Pelican Trader followers on the X platform. Diego, FF Nerd, 89, Sai, Crack 9, Kunal. Thank you for your suggestions. It's been a really busy week, very active week trading wise. Okay. So I will do my best to get to your suggestions. I really appreciate them. They're great suggestions, and I'll do my best to get to them, okay? So stay tuned for more technical analysis in the week ahead. In the meantime, I wish you all the best of luck in your trading and investing, and we'll see you soon.